All right, good morning, everyone. We're going to get going here. All right, U.S. markets managed to put together another session of positive gains. I think it's 7 days in a row that we've had an advance. The VIX dropped to sub 12 yesterday, which I think is record lows again. I mean, it's the price to protect yourself with when the options market is just dropping on a daily basis, it's starting to make me specifically more worried. China also had a lot of data over the last couple of days. It's not been legendary data out of there. But the U.S. just manages to continue to hold on. So I think it's really important. I mean, that we realize the kind of mindset that we're in. The one thing I will say is that with the VIX there, it's really starting to seem like we're getting really complacent. And when you look at it, we're about a month and a half away from May. So that's also a little bit scary with the sell in May go and go away story that's worked really well over the last 3 years. Asian shares, for the most part, were down. I think Japan was up last I looked, but we've seen Japan, I think, is on a 9-day win streak right now. The yen's continued to slump, and BOJ minutes are showing that some members are saying that buying longer-term maturity bonds are more and more risk assets are options to expand easing efforts. So I think we're continuing to get that rhetoric. Japan's continuing to be strong, but it's really, I don't think Japan's really the driver of this market. I think it's I think the yen is giving us some risk, some idea of what risk tolerance is. But at the end of the day, I actually think the Chinese data and what's going on in China has actually become a little bit more important. All right, there's no real corporate action today. The one thing that I would make mention of is that Remgro had some numbers out yesterday, which were initially looked like a miss. Obviously, there was a once-off write-down on the back of Mediclinic refinancing numbers. But I think when you back that number out, I think the numbers were better than expected, and I think you saw a reversal of that after you saw the market really realize what was going on there. Japan, we had a tertiary industry index out. It was worse than expected overnight. Later, we've got the SA current account balance. We've got industrial production, manufacturing production in the UK, and also House Budget Committee in the UK. So nothing real significant out in terms of data today. You can see we've got no corporate action on the go today. So we really we're really looking at very little going on today. The big thing that's going to be happening today is really going to be I think how markets are going to trade into the FTSE and the SWIXY reweightings that are happening at the end of the week. We'll give you a little bit more as we get closer to that, but our volumes have been really light yesterday, almost eerily light ahead of some of these massive reweightings. So we thought we would have seen some of the flows come through a little bit earlier. So it's something to really watch for the next couple of days to see if we start to get some of these stocks trend on the back of that. Okay, the first one I'm going to show is Standard Bank. I'm going to show this on a short and long term. I want to show. Why is that not coming up? Please wait. Processing, please wait. What the hell's going on, man? Okay, sorry, my charts aren't updating here for some reason. Let's try another one here. Okay, sorry about that, guys. I'm gonna actually just log out and log back into my trade of my system real quick. Let me just log back in. Sorry about that. Okay, hopefully this is going to work now. Sorry about that, guys. I'm going to get us sized up here. Alright, okay, so the first thing I wanted to show was Standard Bank. I want to show on just on the 10-day. I mean, it's nothing. What's amazing here is if you look here, this is about the top end of the range. You can see on the last 10 days, we've literally touched, this is 18 Rand. We literally touch 18 Rand every single day. And then on the downside, we've literally touched right about here. So about 16 Rand 70 every single day. And that's over the past 10 days. So, right now, I mean, yesterday we did get a close at 19, which is kind of the higher end of the range you can see. But nevertheless, I mean, selling it kind of, mid-18s and buying it back as it breaks a little bit below 16 has been a pretty safe bet. And in the afternoon, typically it's been the opposite. You get the thing running from 16 odd when it looks really terrible back up to the top. So for all the day trading guys, I want you to just think about that today. I mean, this is going all the way back on a 30-day chart. It still looks very much the same. That range has gone from a little bit higher range, which is around 1950 to 1650 to around 1850. Maybe closer down to 16. So, but pretty incredible how range bound this stock has been over the last little while. What I am also going to jump in and show you real quick is a 10-year chart on Standard Bank and how important this level is at $120, which we've just fended off a few times there. You can see how we're kind of consolidating and building. So the one thing I would say is that we obviously, the pullbacks are starting to get less and less. We have them in this uptrend, and when we're talking about, we touched this level in 2007. When we retested this level in 2010, came all the way back to sub 90 Rand, and now we're back again in 2013. So this is a long term. I think we're looking to, if we get a real close above. I know we think we closed at about 120 and a quarter one day, but it wasn't. That was pretty much all we got. If we get a significant move through 120 or close above 120, I think this thing really could end up just flying. So that could be something to watch going forward. All right, the next one I'll show is Nedbank. Nedbank, obviously, we called this one 2 days ago as it broke through, right as it happened. We showed it on Twitter, and then I talked about it yesterday morning. I just want to say, we got confirmation of it as well yesterday. And I just want to talk about the target. This moved from 188, which was the clearly defined bottom end of this range, to 198. So, we're looking for a 10 Rand breakout through this 198 level, which would be around 208 that we'd look for as a target in Nedbank. All right, I'm going to show Anglos here. Johnny Reichman put me onto this one the other day. I mean, I can go back and show you on 10 years, so it gives you a little bit clearer idea. But the general idea is that in terms of support, we are coming up onto some quite long-term support on Anglos. If you shorten it up a little bit, you'll see that support comes in right around 247. Let me just pull this in a little touch so you guys can see. Sorry. At 247 is right about that level. And this is a really key chart because when you look at it long-term here, we're actually looking at a very long-term head and shoulders, which we talked about quite a while back. This is a multi-year head and shoulder pattern that really, in the long-term chart's not looking great. And what's important is that this level has to be held, kind of right down here. It's an absolute must that we hold the bottom end of this level, which is about 237. And if we don't, I fully expect us to go down and possibly even test previous lows. But what the real thing is, we're going to get I think a 4 Rand 70 divvy, coming at the end of this week. So that'll probably get us down close to testing this trendline support, and it's going to be one that we need to watch really closely over the next little while. If you guys haven't noticed, a lot of the charts that we're starting to look at are a little bit longer term, which I think is really significant that we're coming in and testing a lot of this long-term support and resistance levels. And typically can be big inflection points for markets. All right, this one this is Billiton's, and we're kind of right in the middle of this little risk range right here. I think you can really make a decision once we break out of this range, which is between 284.50 and 290. You can see yesterday we failed again up toward 290, and the day before as well. So I think it's 3 days in a row where we've really failed at 290. 285 or 84.50 is really support there. But this is kind of the risk range in bulletins that we're waiting for it to break out to see which way we can really go there. Impalas I want to show on a 30-day as well. We talked about this level before as being about 137, but I think you can make an argument now that this level is around 138, and you can see there, I think, we're wicking through it a little bit here, but, we talked about 137. We closed at 37.50, but I'm looking at this chart again this morning. You can really see the clear defined resistance that we've had the last 3 trading days up around $138. And that's really, to me, maybe that looks a little bit more like the number, but this is a huge inflection point in Impalas. I really think that if we can break above 138, that this thing could develop a little bit of legs. It's going to be really important to watch this trade around 138 the next couple of days. All right, we'll look at Anglo Gold. I'm also going to show that on a 30-day, and just show here. We really broke down, and we kind of we kept trying to punch through this level here. Yesterday we got above it temporarily. We kind of closed just below it. That's at 227. Is also kind of where there's big short-term significance in Anglo Gold. I think if we can get above that level. It could be possible for us to have reasonable upside from here. We could possibly even trade all the way up to where we broke down, which is around 247. So watch Anglo Gold around 227. If we can't get through there, this thing already has had a 17 rand bounce, which is it's a hell of a bounce, almost 10% off the bottom. So it's something to keep in mind. But watch this one closely. If we don't get through 227, and we could fail there. If we do get through it, it could have legs. All right, and then the last couple I'm going to show here, we're going to start to show a few more of these. I'm actually going to look at first I'm going to look at a 2, and then I'm going to look at a 10. I'm going to show you guys Cisco, which is really broken above lateral resistance here at around 21 and a quarter. So call it 2130. So we've broken this lateral resistance on a 2-year. And if you look back at a 10-year, you can see here how in Cisco we've really. I'm not going to show it from that peak there. Sorry. I'm going to show it more from. I'm not going to show it from the wick there. Let's just draw it from here. We've really just, as of yesterday, kind of broken above long-term trendline resistance. This is going all the way back to 2008 in Cisco. And so anyway, we obviously we've got guys. We're getting ready to start getting active again in the intraday space on U.S. and U.K. markets. We also obviously have clients that are starting to trade a lot through our CFDs with Cantor. Cisco would be looks like a great entry here around this breakout level yesterday. And then the next one I'm going to show is one of from the UK, which is Associated British Foods. And we're going to show here we've got let me just jump down to maybe a 3-month. Yeah, you can see here on a 3-month that we're right here at a critical level here at about 1870. I actually think any trade to the upside would be a confirmed breakout. We really did kind of close yesterday on a breakout here, but this is really clutch. If we can trade any higher today in ABF in London, I think we're breaking out here, and it's a nice pattern. I love these breakout patterns that happen when we just can't, the pullbacks just get smaller and smaller off of resistance, and then we finally break through. So watch ABF today, watch Cisco. There could be some legs to the upside in these today. All right, that's it. Thanks a lot, guys.